everybody, and welcome to the Crypto Hipsters Curtain Calls, episode 14, Land of Confusion? Helping investors and traders navigate the Wild West of cryptocurrencies is the title of this compilation of 4 clips from 4 podcasts from seasons 6 through 8. This particular episode has 3 clips from seasons 8 and 1 from season 7. My interviews in this podcast episode are compilation clips of 4 interviews. First, I spoke with Mohd Kifa, who leads the compliance efforts at Flipster. Mohd and I had a wonderful conversation in November 2024 at the beginning of season 8, and we spoke all about optimizing the crypto trading experience with perpetual futures for Bitcoin, altcoins, and meme coins. The second interview was with the co-founder of Bracket, Michael Wasyl. We spoke about helping crypto traders and investors take advantage of the best strategic opportunities to generate yield and enhance efficiency through liquid staking. The third conversation I had was in June, kind of recent, with Mukarram Mawjood. Now, Mukarram was in June 2025, season 8. He was the CIO of Blackstone Commodity Group. And we spoke about how to invest, learn, succeed, how knowledge, education, and mindset can empower investors and traders navigate crypto and commodity markets. And last but not least, my conversation with Mathias Beke was in June 2024 during season 7. He is the co-founder and CTO of Kairon Labs. And Mathias and I spoke about how to spot wash trading and rug pulls and various sorted unethical behaviors in crypto markets easily. And he was part of my 15-episode compilation called Crypto Hipster Presents Shooting from the Hip. And there was 15 podcasts where we didn't plan out what we're going to talk about. We didn't know. We just came on the call, and we talked, and we shot the proverbial shot the shit, and we had a wonderful conversation. I had 15 of those episodes shooting from the hip, and there were delightful conversations. We got really in depth, and that went really, really well. Just ad hoc, just shoot it out, wonderful conversations. And so those 4 episodes make up this compilation, this episode of Crypto Hipsters Curtain Calls, entitled Land of Confusion? Helping investors and traders navigate the Wild West of cryptocurrencies. This podcast is available on Apple, Spotify, YouTube, anywhere, iHeartRadio, anywhere you listen to your favorite podcasts. Sit back, enjoy the compilations, the clips from these episodes. My full episodes are all available at any time. You can check it all out if you'd like to learn more or listen more to the whole thing from any one of these guests. But yeah, this is a preview. This is a wonderful episode. Check it out, and I'll see you at the end.
Something that people don't talk, at least on X, and like to have it. Some people talk about is, for the past few years, they say China has banned Bitcoin. China by the miners, wonderful. Last week, there was a judge in Shanghai that says cryptocurrency is a commodity and it's fully legal to own it. Right. Everyone's talking about it, but they bringing it back, right?
True.
So what are you seeing coming out of China that no one's talking about that is going to come back to the market that's going to have a huge impact?
So you see, for the very longest time, China was very much had shielded itself away from this industry. it kind of like made it a bad actor. You know, cryptocurrency means it's money laundering, it's whatnot, you know, those sort of things. But it's waking up to the reality that, you know, it cannot live without it. I think everyone will agree that cryptocurrency, Bitcoin, or anything else is here to stay. It's just a matter of trying to make sure the regulation surrounding it is clear, such that your users, your citizens, are not the losers at the end of it all. So I think China had done a wait and see approach, in my opinion, for the very longest time. It is seen how countries such as Singapore, Hong Kong, for instance, or any other Asian countries here have kind of like shaped the regulations towards it. It has looked at how Europe has shaped its regulation towards it, the US, how it has shaped its regulations. And I think it has taken enough time to study and understand what it should allow and what it should not allow, right? And it's coming out to give you a very clear message at the end of it all, right? If it had not done this and it had dabbled up and down, you know, changes regulations up and down every now and then, it would have sent a very distorted message to its 1.1 billion citizens in its country. And that's going to cause a lot of chaos, in my opinion, right? So I think it is very clear on how it's seeing these digital assets. And I think it's a way forward for the rest of the world, given that there's a huge population waiting to capitalize on what's going to come in this industry from China. Yeah.
Yeah, that sounds right. You know, when I think of China, I think of one of the famous founders ever in this space. I think of CZ.
Yep.
You know, he actually the other day and said and I read it on Twitter or X this morning. He said he was advocating for real blockchain adoption over meme coins. You know, what do you see coming down the pike as far as real adoption? How do we get there? How can you guys help get the next billion retail user, 1.1 billion retail users on board? You know, what do you see the outlook for 2025 as far as the use of real blockchain apps?
It's only going to get even more concentrated, I would say. A lot of you see traditional banks are going to blockchain right now, not just for cryptocurrency per se, but even to set up their own accounting and ledger systems. They are moving to that sort of a decentralized sort of a protocol, right? So it's just not in banks, just not in cryptocurrency, but everywhere else, blockchain is going to become a reality. It is something that cannot be erased in simple words. It can't be erased off the ecosystem, right? And simply for that matter, it is going to become very prevalent. And I think what I see right now is just the infancy stage where people are experimenting. Some fail, some make it very successful in how it is. Let's say I'm giving it another 2 years, given the space of things, to make this thing the mainstream across all industries, not just finance, not just cryptocurrency per se, right? Every other industry is going to adopt it.
Say it's important for, you know, companies, for institutions, for, you know, especially like wealth managers and such, to have an effective DeFi strategy where they're not chasing yield, but they're actually managing it properly. So what are some of the key strategies? What recommendations do you have for DeFi strategy, and what do you think implementation will look like from that institutional perspective that is conservative and smart and not chasing?
Yeah. I mean, I can't give any financial advice, or, you know, I'm not a mutual fund person necessarily, or an asset manager, but I will say this: I've been in DeFi a long time, and I could say that, like, since really the beginning, and I could say that there are plenty of opportunities for actors, you know, good actors, bad actors, whatever, to produce yield based on inefficiencies that are still around, like we talked about. So we're talking arbitrage, we're talking depeggings of certain stable coins, repegging. You know, the market will be efficient if there are opportunities for yield. right? So if it's still PvP, if you can make money by putting a stable coin back to peg, it will be done, right? It will be done unless there's a systemic problem that is fundamentally unmooring the asset from its base, like what happened with the Terra crisis. Save that, smart actors and managers and traders will repeg assets. There's that. There's always delta neutral trades, basis trading, things of that nature. You see Athena doing a similar concept with a stable coin. They issue their own stable coin and then they allow you to stake it basically to get a basis trade yield. And they're doing that. I don't want to say anything kind of negative about it, but it's off chain. And so you don't know 100% what's happening. And there's risks there doing things off chain, which is another layer of risk. But on chain, there's still plenty of opportunity up to a certain threshold. DeFi is not the biggest market, right? So a lot of banks will trade the total market cap of DeFi in a day, right? Like it's a spot, it's a tiny spot, but that will grow. We'll look back at this moment and laugh when we have this conversation. We'll come back in 10 years, 20 years and be like, wow, like that was a teeny tiny little thing back then and we were excited by it. But look what it is today with real assets coming in. And so native asset management is becoming a big trend from the asset managers I speak with, like these big guys who are doing things for real in TradFi, then are experimenting with DeFi and saying, I don't have the infrastructure to like expand my base. They're like, I could take capital like any hedge fund could, but I don't have the infrastructure to like host a platform, which is everyone's dream, right? Because there's basically a passive income potential there from flat fees associated with just being on a platform. No performance fees, but flat fees, just fixed fees. And that's attractive because then you could start tacking on higher margin product to that platform in order to maximize the profitability. But in the beginning, it's like, how do you grow this thing? And that's where a lot of the larger the funds they don't have a lot of time to build this stuff, test it, and the expertise needed to build these products is not as it's not as available as you would think. It's again zero-sum game, so it's difficult to actually develop these things. And so I think that's like what I would say for the passive kind of larger funds, existing TradFi guys that want to expand their DeFi exposure to beyond hedge fund clients. You're talking about a whole world of people on chain who are not used to that world. They don't have exposure to it. They're not super high net worth, or they simply didn't grow up in that world, right? They grew up in the crypto world. They got wealth in the crypto world, and they don't really want to leave, right? They don't want to leave on chain. It's fun. It's how could you go back after coming to this space? How could you go back? It's full of craziness, but it's like the most exciting thing you've ever done, right? And so it's just an amazing space. So good and bad.
Crypto right now to me seems to be in a holding pattern, right? What do you think would be the factors that facilitate that next upward move, when that'll happen, and what we need to look at to assess the sustainability and the improvement of pricing in the market, because we're not quite back to where maybe a lot of people think we should be at.
Okay, that's interesting because for me, I don't think of crypto as being in a holding pattern. Okay, and this is interesting, right? Because we have two, and this is why people love shows like yours, right? Because they can begin to get extreme value from this conversation because it'll allow them to have an actionable sequence. That's what all of trading and investing is. You can do as much research as possible, right? But if you don't have an actionable way of executing, that's a problem. Right? And that's why a lot of our training comes in, having actionable steps into the research you've done, right? But the actionable steps also have to be very simple. The research can be complicated, but the execution has to be simple, okay? So here's why I say that crypto is not in a holding pattern, because we just created a new record high for Bitcoin just a few days ago, right? Before this Europe 50% tariff announcement came out of the blue. We were at 111,000 or so. So for me, what that is, and before that, because we're so involved in this trading and markets and building positions, we've been watching price, right? So we saw how Bitcoin was forming a base. It was finding it very difficult to go over 104,000, 105,000, right? Every time it'll go there, it'll get hit, come to 98,000 or 99,000. It probably did it like 4 or 5 times, right? Maybe even more. I don't know. Someone can correct me. But after that, when it broke through that, then it went to 109, 110, 111, right? And now it's basing again. So here's how you have to look at markets. If markets are like these big monsters, right, that they need to feed, after they feed, they need to go back into the cave and rest a bit and then come out, right? Asset classes are like that. So Bitcoin is this massive monster that started chomping down and eating, from 104,000 to 111 now, and now it's just resting a bit. And I believe, like, mathematically primed, it's going higher. So now what you do is you got to figure out two things. Do you want to be on that train, or do you want to figure out how to play something that can benefit from it? Like, for example, when gold goes up, silver tends to go higher with time, right? So with Bitcoin, I prefer playing the alts as they go higher. Solana has come down significantly, so you have a great play there, and Solana has a lot of advantages to it, right? AVAX, Quant, just in the last 2 days has gone up $24 almost, right? In 2 days, from maybe $90 to $120 or so, or $119 today in the morning. This is what I call success leaves clues, like Tony Robbins says, right? Success leaves clues. The market leaves you clues. It's telling you, I want to go up. But here's the problem. A lot of people, they want, because of the ego, right? They want to be either right, or they don't want to be wrong, or they don't want to admit that. But it's not about that. It's about listening to the market, because the market will always be right. Remember that. It's not whether you're right or I'm wrong, or you're wrong and I'm right. It's about the market. So if you listen to the market very carefully right now, it's saying, if you just leave me alone a bit, I want to go up significantly, right? That's all it is. If the noise goes away, we could be at 120,000 Bitcoin if not for that, announcement last week, right? It's just how it is. Now, people sometimes come to me and say, hey, why does this have to happen? That's just how markets are. You have to be able to lean into it and go through these uncertainties and still have a solid plan so you don't miss out, right? And that's why I believe the new leg up has started, by the way, right? Certain things have to catch up. Now, I know there's been a delay in the alt season, right? Usually, if you go back to all the other halvings, this one's been a delay. The other thing is, if you look at the other halving years, you'll see that the peak price is usually during October, November, December of the subsequent year from halving. So we still have quite a bit of time, okay? And that's why we're not worried about this at all. And we look at any correction as a godsend, right? To build big positions and hold on. Now, what's going to happen is you need to be able to, navigate your mind when we come into that October, November, December time. Now, here's why I'm saying this to Jamil, and this is really cool because on your podcast, people will this might be one of the first times people are hearing this, right? Because we've had a delayed alt season for the first time in the last 4 halving years, we might actually go into the following year, 2026.
That's an area that people still can't figure out if it's a wash trade or if it's a bot.
Yeah.
Or what are some rules of thumb that you give to people when they should be looking at, when they start to look at a new token to invest, it's real volume or not?
Yeah. That's a very good question, and actually, I'm happy that and I can explain, because it's really something that I'm pretty frustrated about. So you have two concepts if you're going into a market, right? If you want to invest or you want to trade, there's one, liquidity. So liquidity means that you can buy an asset without buying it up to 10%. So you want to buy, just saying something, $100 worth of a certain coin. You don't want to buy it with a 10% price difference, right? You want to buy it at this price, right? So that's like liquidity. That's a bit more difficult to fake, right? So that's pretty crucial for it can be fake, but to keep it simple, that's a bit more difficult, and that's crucial for traders to look at, right? Now the other side is volume. Now volume indicates whether there are other people actually trading this, right? So okay, it's good to know that if I can buy an asset, I don't buy it with like a huge slippage. But I'm also interested if there are other people trading, right? If there's enough people trading these assets, so it's also showing that it's more distributed. And so that's pretty crucial. And so to go into your question on wash trading, actually, there are different forms of wash trading. So if you look into a chart, you open whatever exchange, the volume bars are giving a pretty good indication. If you go and look into the time frames of like 5-minute time frames, actually the volume there's volume, but it's stable. There's no change. It's just so there's constantly the same volume, which is not normal, right? You have Asian sessions, you have European sessions, you have US sessions. You know, these volumes they fluctuate, right? They change, right? And that's one thing that I always look at is like how flat, even if there's a lot of volume, how stable is the volume? The more stable it is, the more significant you could say like, oh, this could be wash traded. That's one. And then two is actually a wash trade. If we look at the market, a wash trade actually happens within the spread. So spread is like best bid, best ask. And so somebody places them, right? Could be a market maker, could be somebody else. And so those orders are there. And a wash trade is, in a lot of cases, not always, is happening between those two orders. And so you could actually see, if you open order book and you see the last traded price and it's always trading within those two orders, then something's off, because that's actually not, it's not visible. It's not trading with something that is actually in the order book. And so these are like two very clear indications of wash trading. Yeah.
Ladies and gentlemen, this was episode 14 of the Crypto Hipsters Curtain Calls, Land of Confusion, helping investors and traders navigate the Wild West of cryptocurrencies. I hope you enjoyed this episode. And like I said earlier, if you'd like to listen to any one of these four in their entirety, they're available on Spotify, on YouTube, on Google, on anywhere you listen to your favorite podcasts. And I hope you enjoyed this episode. And tune in for the next one. This is episode 14 out of likely 67. And when I say 67, my son says 67. And apparently that's a thing around college campuses at basketball games. 6-7. So yeah, this is number 14. And enjoy. Have a wonderful week. I'll see you soon.